Hello, hello, hello.
live will start at 6 p.m. So if you are already waiting, so just ready with your materials, or else check your marathon once. Okay, let me wait up to 6 p.m. So because we have scheduled at 6 p.m. Okay. So very good evening to everyone. People are joining. So 47 are waiting. Oh, very such a good, great response. So because I told you it will start at 6 p.m. So people are eagerly waiting for it. So I promise you, definitely this session will help you out for your tomorrow's exam. That is my guarantee. Because we will touch all areas where examiner is asking, or what are the areas students has to pay more attention. And I will focus on MCQs as well, and if time permits I'll cover partnership accounts also. By the way, before starting our session, so people of 64 is such a great number. And tell me, how was your today's exam paper, whether you have written OM and SM, or if you are writing only group 1, how was your performance in law or OMSM? And people in who are watching this live, please respond in comment section. Definitely I'll give reply to each and every person. Exactly at 6 p.m. we'll start our subject. Prakash, what chapters to be discussed? I will cover all important areas first of all, Prakash. And we trust you. Thank you. Definitely, I'll do my level best. Dhanush, in insurance claims, abnormal loss method is not understood. Of course, we will cover. Went well, better than good. Today paper is easy, and explain partnership for sure. We will cover partnership also. Dhanush, yeah, I think you got the reply. Sirisha, law went, okay, easy paper, okay, fine. Of course, G. Sudhir, of course, I will do problems in hire purchase system. Repossession, okay. Sravanti, good evening, sir. Because of you, my accounts knowledge increased, sir. Thank you so much. Thank you. Yeah, Dhanush, sure. Yeah, single entry, sure. Varalakshmi Prasanna, hire purchase goods repossession, okay. Dark Devil, wow. Today paper was good, yeah. Nice. So very great response. For still 8 minutes more. 60 people are waiting. Great. So share the link to your friends. Definitely it will help you out. Sharada, hello. Maha MCQs. We'll try. How many hours will be this session? So definitely I will not take much long hours. I know because I know the situation of student. Definitely I will not take all of hours whatever you have. Definitely I will take maximum 3 to 4 hours. That means before your dinner or that's it. Okay, definitely you will feel this is value addition session. That is my promise. Yeah, Das, good evening. నేను ఇప్పుడు BCA marathon చూస్తున్నాను. Okay, 9. MCQs will be covered. Yes. Hello. Sharda, hello. Chaitanya, good evening. Pujita, good evening. Yeah, Mitra Reddy, I think theory is important. Yeah, of course, important in accounting standards only. Yeah, start with accounting standards. Karnakar. MCQs. Motivation ivali. Yeah, sure. I'll give my motivation, but I'm sorry, I'm not that much expert in that field. But I'll try. Charan Kumar, I'm so glad that I watched all your classes. Yeah, thank you. I was waiting for you from morning. OMG. Sir, one doubt. Yes, thus, please. Everybody, good evening, good evening. Everybody's giving good evening. Thank you, thank you. Yeah, definitely I will close this session. Depend upon how session is going. Definitely I will close before 10 or 10:30. If time permits, my agenda is definitely it will help you out your exam. 80, wow, great. 80 is such a great number. Sure, sure. I think new people have joined. So still 4 more minutes. Now the time is 5:56. At 6 sharp we'll start our session. Dhanush, God of Accounts. Good evening, everybody. Yeah, my prediction, definitely I'll give all of my predictions. That is for sure. No doubt in that. Yeah, thank you helping our preparation. Yeah, that is my responsibility. Your explanation is too good. Thank you. Definitely I will tell the pattern. మీరు my accounts దేవుడు. No need. Sir, important questions. Important questions. Okay. How can I? AS 11. I can't give you important question, but I'll tell you important areas. 101 people are watching. Great. Last 2 minutes, I'm going to start our War Room Season 2. So Season 1 went very, very successful. I hope this season will definitely helpful to all of you who are watching this video or who are attending this on live session. Don't worry, my dear students. So if you have missed any previous content, so everything will be available on YouTube only. You can go back and watch the previous content as well. So last 2 minutes more. Just if you are still any of your friends are waiting for the links, and go there and share the link with them. Yeah, last 1 minute I'm going to start our battle. In fact, I can say last 60 seconds. Chinnu, hello. Hashtag 2. She's trending, huh? Last 30 seconds. Yeah. It's the time to start our War Room Season 2. My dear students, everybody who are watching this live, I'm so happy that such a great response. 105 members. Yeah. Fine. I think I'm audible and my video is clear, first of all. Yeah, everybody tell me, are you clear with my audio and video? If that is okay, let's start our battle. And I am very much excited and I am very, very, very confident that this war room is going to create wonders. Yes, 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 yes. Everybody is saying yes. My dear students, without any further delay, let us start our battle. So first of all, before entering into the main subject, 127, great. Before starting the main subject, I want to tell you one small point which is not a motivation point. So if you are writing only single group, you have written your law exam. If you are writing both groups, so your OM and SM is completed. Ignore about those previous papers. If you have performed very well in those papers, feel happy and ignore. For example, if you have performed fantastically in both those above 2 papers, but if you are not writing, if you are not performing well in remaining 4 papers, then definitely you will not clear your groups. Even though if you have performed with a little bit 50 plus or 45 marks in previous 2 papers, if you performed very well in the next 4 to 6 papers, definitely you will get a very good score and you will clear your single group or both the groups of your CMA inter. So please give equal importance to all the subjects. So as of now, please don't think about any other subjects. It is done, ignore. And very happiest thing to share, I think don't feel, I'm just telling this moment. So for the first time, 154 members on our live. So I hope everybody will be benefited from this session. Okay? Yeah, come on my dear students. So first of all, in our financial accounting subject, what are the areas we have to study? And exam is on tomorrow. We don't have not even full day also. Then what to do? So that is the reason I'm here. Definitely this will help you out a lot. So directly let me enter into the main topic. So first of all, whenever you get the examination question paper, I think you will get examination paper at 1:45 p.m. right? So you have 15 minutes of time to read the entire question paper, if I am not wrong. Correct no? Yeah. So first, my dear students, very beautiful tip. Don't look at MCQs directly. This is very important. Don't start your answers with MCQs. Don't look at MCQs in the beginning of your studying question paper. Whenever you got the question paper, turn all MCQs, go to directly descriptive part. Okay? I will tell you reason why you should not look at MCQ. For example, out of 15 MCQs, if the question paper is easy or all the 15 MCQs are familiar MCQs which you have studied, then that is okay. Definitely you will feel happy. Imagine out of 15 MCQs, you are confident only up to 6 or 7 MCQs. Then your subconscious mind will think about remaining 8 MCQs. Even though you are writing some descriptive question, your back and mind, you will think about what about my 8 remaining MCQs. So I lost 16 marks. That means your target in your MCQs is 28, 26 or 30. But at the beginning of your exam answering only, you lose your confidence. That is the reason, don't look at MCQs. Then what to do, sir? Directly go to the question paper and check where is hire purchase system chapter. What is the chapter we have to check? Hire purchase system. My dear students, very easy. I will tell you how examiner will ask question from hire purchase system. Actually, from hire purchase system, I'm sorry my dear students, I'm not looking at comment section. So everybody are sending their wishes and hi. Hi to everybody. Yeah, hi to everybody. So let's focus on our preparation. Yeah, thank you for your love and you're giving lot of messages in comment section. Yeah, please come to the session. So first our target chapter is hire purchase system. From hire purchase system, how many marks examiner may ask? From hire purchase system, examiner is generally asking 2 to 9 marks. Sometimes one MCQ for 2 marks, sometimes one 7 marks question, sometimes one MCQ plus one 7 marks question. So generally, how they are asking questions in hire purchase system? Listen. Yeah. So I'm not looking at comment section anymore. So let's pay more attention on our chapter. So first, in entire hire purchase system, let's divide it into separate parts. Part 1. Only they will ask you interest calculations. 1 minute. Okay. So from hire purchase system, first part, they will ask you to find out interest calculations. Second part, they will ask you to do accounting in the books of hire purchaser or hire vendor. Third one, they may ask a question from repossession. These are the 3 areas where examiner will ask you questions in hire purchase system. Okay. So before entering into questions, let me discuss what is the background of the hire purchase system chapter, and I'll take very less time. You don't worry, you don't bother about it. Listen. So in hire purchase system, there are 2 important formulas. They are, I think everybody know, hire purchase price equals to cash price plus interest. Second formula, hire purchase price equals to down payment plus total installments. This is the formula for hire purchase system chapter. These 2 are very, very important formulas in our entire hire purchase system chapter. Listen. For example, in MCQ, how they can frame the question, they will give you CP. CP means cash price. They are giving CP. CP is, for example, 2 lakh rupees. And they are giving a total interest. Interest equals to 50,000 rupees. They are asking what is the hire purchase price. How to find out hire purchase price? By using this formula, hire purchase price equals to CP plus interest. What is CP? CP is 2 lakhs. Interest is 50,000. Then 2 lakh plus 50,000 equals to 2 lakh 50,000. This is how they can answer easy MCQs. Second one, question number 2. They will give you CP, cash price is 7 lakh rupees, and they are telling you down payment equals to 2 lakh rupees. First installment 2 lakh rupees. Second installment 2 lakh. Third installment 2 lakh. Fourth installment 2 lakh. This is a total question. You have to tell them what is the higher purchase price and what is the interest. How to answer this question? First of all, we know the formulas, right? First one, higher purchase price equals to, what is the formula for it? Down payment plus total installments. You know the down payment. What is the down payment amount here? 2 lakh rupees. Installments how much? First installment 2 lakh. Second installment 2. That means total installments are 2 lakh into 4, 8 lakh plus down payment 2 lakh. Totally higher purchase price is equals to 10 lakh rupees. What is the CP? CP means cash price. This is 7 lakh. Total interest is 3 lakhs. This is very easy to find out. Saujanya from Karnataka. Hi. So interest 3 lakhs, CP 7 lakhs. That is okay. Clear. So you tell me, my dear students. So everybody can answer this kind of question if they are asking what is interest or what is total cash price. But my question, my dear students, my question is, out of this 3 lakh interest, how much we are paying in first installment, how much we are paying in second, how much we are paying in third, how much we are paying in fourth. That means I need to know what is the interest in each and every installment. That is the what examiner is asking question in each and every attempt for 7 marks. If my guess is not wrong, definitely for tomorrow's exam also, if they are asking question from higher purchase system, definitely for sure they will ask a question from this area. You have to tell them how to find out each and every year interest. Okay, so I will give you one unique format. That format is applicable for each and every question if they are asking any question from higher purchase system. Believe me. Okay, I think some of you are not aware of this format, some of you are aware of this format. So listen, whenever they are asking year wise interest, I will tell you how to find out. Just write this format as it is. You don't worry, you will get full marks if you follow my method. Okay, what is the format, sir? Year, opening balance, interest, installments, closing balance. This format is highly more than enough. You will secure full marks, no doubt in that. What is the format? Tell me. Year, opening balance, interest, installment, closing balance. Okay. So let me give the numbering. For opening balance A, interest B, installment C, closing balance D. D equals to A plus B minus C. This format is very okay. Yeah, give me 1 minute then. One minute, sir. 1 minute. Small technical issue. Okay. Listen. So, what is the format? Tell me everybody. Here, opening balance, interest, installment, closing balance. How to get closing balance? A plus B minus C. I'm sorry, my dear students, there is small technical issue with my pencil. So, I can't reduce the size of thickness. So, please adjust. I will change it in your break time. Yeah. So, everybody listen. Yeah, thank you for your messages in our comment section. So tell me what is the format here? Opening balance, interest, installment, closing balance. So opening balance A, interest B, installment C, closing balance equals to A plus B minus C, nothing but opening balance plus interest minus installments. So let's do one question which is examination question. I'll open your examination material, examination question itself. So I'm opening BCCA material. In BCCA material, if you have a material of BCCA, you can open hire purchase system. Otherwise, open any material you are following. No problem. You can find out this question. That is not a big thing because this is an examination question. Where is hire purchase system in our material? Page number 128 in our BCCA material. Sure. Page number 128. Yeah. So we got our question number 1. This question is an examination question. If you are lucky, the same question may be repeated in your exam also, or else they may just double the number, or they may triple the number, or they may reduce the number by dividing 2. Okay, very easy, no? Yeah. Listen, what is the question? X purchases a car on hire purchase system on 1/1/2018. The total cash price of the car is 4,50,000, payable 90,000 down, and 3 installments 1,70,000, 1,50,000, 1,08,460, payable at the end of first, second, and third year respectively. Interest rate 10% per annum. So everybody involved, even though I'm not watching you directly or I am not able to look at the comment section, you just answer yourself or type in your comment section even though I'm not checking out. Okay? Yeah, everybody have a look. So first of all, if the same question comes in your exam, sir, what shall I do, sir? Very easy. First of all, you have to write the given information. You have to write definitely summary of the question. Without writing summary of the question, please don't expect full marks. What is the summary? So tell me what is the given data here. They have given some CP. CP means they have given cash price. How much CP? CP is some around 4,50,000. After that, what they have given? They have given down payment 90,000, first installment 1,70,000, second installment 1,50,000, third installment 1,08,460. I'm sorry, my dear students, I'm unable to reduce the pen size. Please don't mind. 1,70,000 down payment. Down payment 90,000, right? Yeah, down payment 90,000. Down payment 90,000. First EMI 1,70,000. Second installment 1,50,000. Third installment 1,08,460 rupees. They have given one more data. Interest rate 10% per annum. Okay. So how to answer this question, sir? Directly after writing this content, draft this table. Tell me, go to the question, tell me, is there any information about the dates? Nothing but years. I think they have given years, no? 1/1/18, 3 years. What is the first year ending then? 1/1/19, year ending, no? They are paying on year ending. That means 31/12, 31/12/18, 19, 20. That's it. My 24 question is done. One column is completed. Remember, first year opening balance, very small formula is there. Opening balance is equals to CP minus DP. What is CP? What is DP? CP means cash price. DP means down payment. What is CP in the question? CP is 4,50,000. DP is 90,000. That means 4,50,000 minus 90,000 equals to 3,60,000. So now we have opening balance, that is 3,60,000. Next, interest rate, they have given us 10%. What is interest then? 3,60,000 into 10% means 36,000. How will get interest? Opening balance into interest rate. Installments, they only told me in the question, what is installment? 1,70,000, 1,50,000, 1,08,460. So write installments directly, 1,70,000, 1,50,000, 1,08,460. So everybody open your calculator and find out this D equals to A plus B minus C. Right here, this will be the next year opening balance. Tell me in your calci, tell me, find out what is the first year closing balance. Even I'll also bring calculator. So tell me what is the first year opening balance. Nothing but 3,60,000 plus 36,000 minus installment means 1,70,000. So that will be the next year opening balance. So 3,60,000 plus 36,000 minus 1,70,000, that means 2,26,000. That will become next year opening balance 2,26,000. Interest 10% means 10% means how much? 22,600. You tell me what is second year closing balance. How will get second year closing balance? A plus B minus C. So tell me what is second year closing balance? Second year closing balance, tell me. 98,600. I am believing you. What is that name? Meera. If anything goes wrong, students, please ask Meera, because I am just believing her and I am writing this figure. And tell me what is the third year interest? If I write here 98,600, then it will become third year beginning figure, and interest 10% means 9,860. Closing balance third year how much? 0. Okay, this is the done. This is the answer. You will get 7 marks. At last, right, this is the requirement of the question, no? First year interest, second year interest, third year interest. You will get 7 by 7. Don't worry about it. You will get full marks only if you write this table. That's it. This is the answer for question number 1. Okay. So I am giving you just 1 minute time. Please check your question as well as answer. I will share notes of this war room. Just come and listen, no issue. Yeah, very great. Last half minute. I think you understood how to answer this kind of question, right? Yeah, super, completed. Anybody? Working note, this is the working notes, sir. Whatever we have done in Calci, write in working notes, that's it. I think you are not a kid, no? I think you know it. Yeah, everybody getting up to which time? Yeah, I told you, no? I'll complete at 10 or 10:30. Yes. That is question number 1. Come to question number 2, my dear students. This is also June 2018 question. So I will cover only these 2 questions and remaining I will explain how to answer. Yeah. My dear students, question number 2. X purchased a TV on hire purchase system. As per terms, he is required to pay 3,000 down, 4,000 at the end of first year, 3K at the end of second year, 5K at the end of third year, interest rate 12% per annum. You are required to calculate total cash price and interest. My dear students, tell me what is the difference between question number 1 and question number 2. If you observe, in question number 1, they have given cash price. In question number 2, they have not given cash price. That is irrelevant for us. Our target is to find out the answer. What shall I do? We have to just draw the table again. What is the table? Tell me. What is the table? Year, opening balance. Next one, interest, installment, closing balance. Same as previous question. Okay. Next one, let me write the data. Installments are given now, 4,000, 3,000, 5,000. Let me write the installments first of all. 4,000. What is the second installment? 3,000. I'm sorry, my dear students. Small technical issue. I'm unable to reduce the size of pen. So please adjust up to before break. Yeah, 4,000, 3,000, 5,000. What else they have given? They have given interest rate 12%. You tell me, what is the opening balance formula? Year 1, 2, 3. What is opening balance formula? CP minus DP. CP means cash price, DP means down payment. But unfortunately, we don't have CP. But we have DP. DP is 3,000, but we don't have CP. Without CP, I can't find out opening balance. Without opening balance, I can't find out interest. Without interest, I can't find out closing balance. OMG. That means we struck with the opening balance only. So these problems many students will do in different ways. But very easy, my dear students. When examiner is asking this kind of questions, what shall I do, sir? Just take last figure as 0. Sir, why 0, sir? Check your previous question answer. Here also it becomes 0. That means whenever your all installments are paid, your closing balance is 0, your liability is 0, of course. So it is 0. Then what is this amount? This amount is 5,000 rupees. That 5,000 is what? That 5,000 is third year installment. In that installment, it is comprising of both principal component and interest component also. Correct? No. That means in this 5,000 rupees, we have both principal and interest. Interest how much? 12%. If you take 100 rupees is principal, 12 rupees is interest. That means this 5,000 rupees is equals to 1112. We need to find out what is 12 rupees. Then 5,000 by 1112 into 12. So 536 rupees is interest. Sir, how I found out this 536, sir? 5,000 by 1112 into 12. You know the formula A plus B minus C equals to D, right? Then you have D, you have C, you have B. Tell me what is A. How to find out? A plus B minus C equals to D. You don't have A, but you have B. That means A plus 536 minus 5,000 equals to, what is D? 0. From this tell me what is A. A will become 5,000 minus 536. Tell me. 4464. After hire purchase, I will start accounting standards. There I will tell you what are the important areas examiner will ask. This will become previous year closing balance. Here important, how to find out second year interest. How to find out second year interest? Second year interest we have to find out like 4464 plus interest. This is a total liability, right? Plus interest. Plus 3,000 by 1112 into 12. Do it and give me the answer. 4464 plus 3,000 by 1112 into 12. Give me the answer. Then find out opening balance. Yes, you are correct, Srika. You are correct, Sharada. Everybody correct. Find out opening balance. 6664. That will become previous year closing balance. Then what is first year interest? How to find out? First year interest will become 6664 plus 4,000 by 1112 into 12. How much? 1142. Tell me what is the first year opening balance? 6664 plus 4,000 minus 1142. I think everybody is understanding how I am doing all these calculations. I have covered this thing in our marathon also. I am just revising it. This is not a regular class. Just try to understand. If examiner is asking question, they may ask question number 1 or question number 2. So many students are asking important questions, right? If examiner wants to pick easy question, they may pick question number 1. If they want to twist, they may ask question number 2. Then what is the answer here? 9521. Correct? 666 plus 4000 minus 1142. 9522. Fractions is not important, no? So we got all interests. Done. They are asking cash price also. What is the formula for opening balance? Opening balance equals to CP minus DP. Just now we got opening balance 9522. We don't know CP. We don't know DP. Then CP equals to 9522 plus 3000. It become 12,522. That's it, done. Easy. Okay. I hope and I wish in your tomorrow's exam they should ask question number 1 or question number 2. Of course, they can modify the numbers. Okay. Now, actually, in recent examinations, they are asking different types of questions. They are giving everything, but they are not giving interest rates. If they have not given interest rates, sir, how to solve this kind of questions? Actually, I have covered the same point in my marathon. If they have not given interest rates, how to answer those questions? Still, I'll just explain. Have a listen. Repossession chances are very less. They will not ask. Very, very, very less. Listen. So sometimes they are asking questions like chances are very less. Litika, what is Likit Kumar? Chances are very less. They don't ask repossession. If Venkatesh, if answer is 1 rupee difference, that is not a big thing. You will get full marks. Yeah. Listen. So sometimes they are asking questions like without giving interest rates. If they were not given interest rates, such kind of questions have been given in some of the exams. So just I will open recent exam paper, then you will get some more confidence on it. Have a look. This is the recent examination paper from hire purchase system. They have asked one question. Where is the question? Yeah, 6B. Why purchased a machine under hire purchase system? As per agreement, 40,000 was paid on signing the contract. I think you people need. So I'll highlight, no issue. 6B, come on everybody. Yeah. On hire purchase system, as per agreement, 40,000 was paid on signing the contract. What does that mean? That is nothing but a down payment. The balance was to be paid in 4 installments. How many installments? 4 installments. Each installment 25,000 each plus interest. They are asking, they are giving info that you have to pay every EMI 25k plus 30 year interest. Students are getting confused that 25,000 is installment. That is not installment amount. That is only principal portion. You have to add interest to that amount. And cash price is given 1,40,000. Interest rate 20% per annum. Find out interest each year. So this is the recent examination paper for 7 marks. Very, very easy question. But majority of students who are outsiders, who are not non-BCCA students, they have answered wrongly. Some of them have not even started with their answer. Very easy, no? What shall I do? Go with the format again. What is the format? You know, here, opening balance, interest, installment, closing balance. That's it, you will get the answer. Let's do it. I will solve this question within the 2 minutes. How to solve? Come on. How to solve this kind of question? Same as our previous questions. Here, opening balance. Remove ads. So I can't remove ads because that is from YouTube. Yeah. Here, opening balance. Thank you so much, all my dear students. So everybody is focusing it. So I hope you will get benefited. 250 members on online. Okay. Here, opening balance, interest, installment, closing balance. Then what is the next thing they have given? They have given what? They have given installments 25k plus interest. Let's do it. What is, how many years first of all? How many years? 4 installments. Right. Year 1, 2, 3, 4. Okay. What is the formula for opening balance? Opening balance equals to CP minus DP. What is CP? They have given no. CP is 1,40,000. What is the DP? Down payment. Down payment is 40,000. That means 1,40,000 minus 40,000. 1,40,000 minus 40,000. Here opening balance will become 1 lakh. Interest rate they have given no. What is the interest rate? Interest rate is 20%. 1 lakh into 20%. 20,000 is interest. Now listen, what is the first year installment? They are telling us 25,000 plus interest. 25,000 plus 25,000 plus what is interest? Interest is 20,000. 25,000 plus 20,000 means 45,000. This is easy. Tell me closing balance everybody. A plus B minus C. Opening balance plus interest minus closing balance. 1 lakh plus 20,000 minus 45,000. Tell me what is the answer? 120 minus 45. 75,000. Yes, you are correct. It will become next year opening balance. What is the interest rate? 20%. No. 75,000 into 20%. How much? 15,000. Installment how much? You tell me. Second installment how much? 25,000 plus 15,000. 25,000 plus 15,000. 40,000. Closing balance A plus B minus C. 75,000 plus 15,000 minus 40,000. How much? 50,000. Then third year opening balance 50,000. 20% means how much? 10,000. Installment how much? 25,000 plus 10,000. 35,000. What is the closing balance? 50,000 plus 10,000 minus 35,000. 25,000. Third year, fourth year opening 25,000. Interest 20%. No. 20% means 5,000. 25 plus 5. 30,000.
So 0, answer is 10. That much easy. What is difficulty in this question? Why students or feel this question is difficulty question? Everything is easy. Difficulty means if they have not given interest rate, that is also easy, very, very easy. That is I covered in our marathon as well. So I think these 3 questions are enough from hire purchase system. Now I will tell you hire purchase system, how to revise before going to examination hall. Okay, my dear students, before going to your examination hall, from hire purchase system, one theory question is there, that is difference between hire purchase and normal sale. If the examiner wants to give a theory question, they will ask you the only one question, that is difference between hire purchase and normal sale. If they want to ask problematic part, they may ask like question number 1 or question number 2 or this question or interest without interest rate question. If they want to go beyond, they will ask you accounting treatment, like they will ask you to prepare machinery account or hire vendor account, but maximum chances are up to here only. Okay, I hope and I wish and my prediction in tomorrow's exam is either they may ask theory question. What is the theory question? Hire purchase versus normal sale, or else they may ask interest calculation questions. Okay, this is from hire purchase system, you can read. Okay, sir, what about the remaining questions? This is the not time to discuss. So repossession, as per my prediction, they will not ask. If you feel that I don't want to take any risk, please go through it. But if you ask me personally, ignore that repossession part. Okay, if you already prepared all those concepts, just check once. But my prediction is interest calculation part, or else theory question, or else interest and accounting part. Okay, this is hire purchase system, my dear students. Next, I will start very, very, very important area. This session, out of our entire war room, next 1 or 1.5 hour, definitely will give you a value addition, that is accounting standards chapter. The weightage is 23 marks, my dear students. 23 marks I am going to cover next. Okay, so next I am going to start accounting standards. 23 marks. Now the time is 6:51. I am giving you 4 minutes of time. Just check hire purchase system, that theory question, and just turn over all the pages how to answer it. Okay, I will start at 6:55 p.m. or else 6:54. You first complete hire purchase system and come back. I'll wait for you. Don't skip this video. Definitely next chapter will give you more confidence. Yes, my dear students, Group 1 accounting paper. So this accounting standards will play very important role. Okay. So you know, in our accounting standards, weightage is 23 marks, but as per my analysis, for tomorrow's exam, weightage is 23 to 25 marks. Everybody know, we have totally 6 accounting standards: AS1, AS10, AS11, AS12, AS16, AS22. So definitely everybody remember the standard number as well as name. AS1 is disclosure of accounting policies. AS10 is PPE, property, plant and equipment. AS11 is the effect of changes in foreign exchange rates. AS12 is accounting for government grants. AS16 is borrowing cost. AS22 is accounting for taxes on income. So from these 6 standards, you will get 23 to 25 marks. Sir, tell me, out of these 6 standards, what are the important standards? I can't tell important standards. Why? Because in group 2, paper number 10, definitely I can tell you only 2 standards, remaining you can skip, because weightage is only 9 marks there. But here, weightage is 23 to 25 marks. So we have 6 standards, they'll touch each and every standard if time permits. Okay. So we'll cover all these standards. Okay. First one, AS1, disclosure of accounting policies. This is very small standard. Listen. Disclosure means giving information in any form. Accounting policies. That means here we are giving information about accounting policies. Who is disclosing? Business entity is disclosing, company is disclosing. To whom it is disclosing? For users who are using your financial statements. Okay. So first of all, what is the definition of accounting policies? This definition is not important for our tomorrow's exam. Ignore. I will focus only for your tomorrow's exam. For your exam, there are 3 areas in the standard are important. Out of 3, this is one of the question. Methods of selecting accounting policies, or they may ask you applications of selection of accounting policies. The question answer is PSM. P for prudence, S for substance over form, M for materiality. Okay, that's it. Just write this content which is on your screen, that is more than enough. I will share this material in our Telegram group. Okay. Yeah. Prudence. This concept says future profits recognize only when realized. Future liabilities and losses, you should estimate and create provision. Simply what this standard says, this standard says future events are uncertain, they are not in our hands. Don't estimate your future profits, but for your future liabilities and losses, estimate it and create provision for it. Write only this content. What I have to write? In view of uncertainty related to the future events, profits are not anticipated, recognized only when they realized. But future liabilities and losses we have to create provision. That's it. Don't write anything. I will give you this PDF as it is. Second one, substance over form. Substance over form means giving importance to the reality, not to the legal form. I think we all know in our hire purchase system chapter, hire purchaser is not the real owner because ownership will be transferred from hire vendor to hire purchaser at the last installment. Correct, no? Still, hire purchaser has to depreciate that asset. Generally, owner should depreciate their asset. Even though hire purchaser is not the owner of the asset, he is depreciating that asset. That is called substance over form. The accounting treatment and presentation of financial statement should be governed by their substance, not by legal form. Substance means reality. We have to give importance to reality, not the legal form. Next one, materiality. Materiality means we have to disclose all material items. Material items means all important items which influence the decisions of the users. Only these 3 points you will get full marks. They may ask for 4 marks or 5 marks, sometimes for 7 marks also. What is the answer? PSM. P for prudence, S for substance over form, M for materiality. Don't write anything. I will give you this PDF as it is to you guys. Prudence means what? So don't anticipate future profits, but with respect to future losses and liabilities, what we have to do? We have to create provision for it. Second one, substance over form. It means what? It means we have to give importance to the reality, not to the legal form. Materiality means we should disclose all material items. Material means what? Which influence the decisions of the users. Okay, these 3 points are highly enough. So second question they may ask from this area is fundamental accounting assumptions. Answer GCA. G for going concern, C for consistency, A for accrual basis. Going concern means what? Business will continue in foreseeable future. That means my business will continue in future also. That means I will not close my business in near future. Second one, consistency. This concept says whatever accounting policies you are following, maintain the same consistency. That means, for example, you have following SLM for this year, try to maintain for next year also SLM, or whatever it is, try to maintain consistency. It is assumed that accounting policies are consistent from one period to another period. Don't change your policies year by year. Third one, accrual basis. Accrual basis means we have to follow mercantile system only. We have to recognize when they accrued. That means no need to wait for actual receipt or actual payment. I think everybody know what is entry for credit sales, debtor account debit to sales. Even though we have not received money, we are writing the journal entry, right? So that's what accrual basis says. So this they can ask him this question as well. Okay, only 2 questions done. What are the 2 questions? First question is PSM. What is PSM? Methods or applications for selection of accounting policy. What is the P for? Prudence. S for substance over form. M for materiality. What prudence says? Future profits and gains not anticipated, recognized only when they realized. For future losses and liabilities, provision you have to create. Next one, substance over form. We have to give importance to the reality, not to the legal form. Materiality means you have to disclose all material items. Next area, fundamental accounting assumptions. This may ask as a theory or MCQ question, both those two questions. So G for going concern, C for consistency, A for accrual. Going concern means we will continue our operations in the foreseeable future. Consistency means your accounting policies should be consistent from one period to another period. Accrual means we have to record when they accrued. Okay, irrespective of the actual receipt or actual payment. Okay, fine. So this is the picture of the total AS1. First one, they may ask MCQ from GCA or PSM or standard number. GCA, that means how they can ask which of the following is not a fundamental accounting assumption. Option A, going concern. Option B, consistency. Option C, accrual. Option D, materiality. What is the answer? Option D is the answer. Or they may ask question from PSM, prudence, substance over form, materiality. Or theory question they may ask, full question, PSM, GCA. Only one problem is question number 1. Just give me 1 minute, I will open my standards material. Yes. This is the question where you can expect if they are asking problem from this AS1. What is the question? Ignore about all this content. There are 4 separate questions. First of all, I will tell you the concept. Whenever you are changing your accounting policy, is it legally valid? Yes, you can change your accounting policy. But whenever you have changed your accounting policy, definitely there may be some kind of gain or loss on it. Gain or loss on it. AS1 says, whenever you have changed your accounting policy, please disclose the gain or loss because of that change in accounting policy to the users. Otherwise, they will believe that profit or loss just because of your performance. For example, listen. For example, I am following SLM till last year. In current year, I shifted to WDV. Because of that method of depreciation, my profit has been increased by 2 crores. But remaining sales, purchases, everything is same. If I don't disclose or if I hide this fact to the users, or if I don't disclose this, if I won't disclose this fact to the users, they will think that 2 crores rupees is increased just because of my performance. But what is the reality? Reality is my performance is same. Why profit increased? Because of change in accounting policy. Because of change in your depreciation. You have to tell that fact to the users. How I have to tell the fact? Sir, till last year I followed straight line method. So in current year I shifted to WDV method. One minute. People are asking some materials. Huh? Okay. You have to tell them fact. How much profit increased or how much decreased? Very easy question. Have a look directly. Value year-end inventory at works cost 50 crores instead of hit there to method of valuation of frame cost. That means previously we are following one method. Ignore about the method name. The method name is sum prime cost method. At that time our inventory value is 30 crores. Now we shifted to another method name works cost. Our inventory value is 50 crores. That means what happened? Our closing stock has been increased by 20 crores. Tell me, whenever your closing stock increased, what is going to happen? Gross profit increases. Net profit also will increases. Just write that fact. Sir, what shall I write, sir? Very easy. Till last year, we followed prime cost method. Our inventory value is 30 crores. In current year, we shifted to works cost. So current year, our inventory value is 50 crores. Because of change in method of valuation of inventory, gross profit has been increased by 20 crores. It affects net profit also. It is increased by 20 crores. That's it. Check the answer. Till last year, we are following so and so method. It increased by 20 crores. That's it. Because of what? Due to change in method of. Write in your own words. Nobody will ask you. Point number 2. Not to provide after sales expenses. Till last year, they are creating provision 2% on sales. In this question, what happened? Up to last year, on the sales, they are creating 2% provision. In current year, they stopped creating provision. They are not creating provision anymore. What is entry for provision creation? P&L account debit to provision. That means you are writing on debit side of P&L account to provision for so and so. In current year, you are not creating that provision. You are not creating means your profit will be increased. That's what you have to mention. What I have to write? Till last year, we are creating provision of 2%. In current year, we are not creating provision. We have changed our accounting policy. In current year, our sales are 600 crores. That means into 2%, 12 crores profit increase. Question number 3. This question is reverse. We are creating provision right now. We are creating provision for 10 crores. Because of creating provision for 10 crores, my profit has been decreased by 10 crores. You have to tell them fact that my profit decreased by 10 crores. That's it. Very easy. AS1 is done. So actually AS1 is very easy standard. So I hope and I wish examiner should touch AS1 as well. You tell me, my dear students, if you are examiner paper setter, what are the areas you will test from AS1? If you want to ask MCQ, definitely they are the only areas you can ask. What is the area? GCA, PSM or standard number. For theory question, GCA, PSM. For question, only question number 1. I think everybody clear with AS1. So if you have any doubt in AS1, I think you will feel this question as different, but that is very easy question. Okay, please check it out. I think you have this material with you. Otherwise, this is the question number 1 in your board material. Okay, shall I move on to the next standard? All the 220 people, give me your reply. AS1, is it completed or not? AS1. That's it. AS1 is GC and PSM. That's it. Nothing more than that. Okay, Shashi. BRS will check it out, sir. They may ask BRS. Definitely, I will give a very good explanation in BRS. Yes, done. Done. Thank you, everybody. 242 members. Yeah. Come to the next standard, AS10. AS10 is PPE, property, plant and equipment. So actually, when I was student, we have two standards, AS6, AS10. AS6 is depreciation, AS10 is fixed assets. These two standards are merged now. Revised standard is AS10 PPE. PPE stands for property, plant, equipment. Okay. And one more thing, my dear students. So, especially in accounting standards, in last time while I was conducting war room, similar to this war room, I told at least 10 times that, my dear students, please focus on difference between AS and Ind AS. They'll ask you the questions. Exactly, that's what happened. They've asked so many questions in recent examination with respect to difference between AS and Ind AS. For you also, I am warning you. So I think if my guess is correct, this time they will not touch differences as similar to your previous attempt. Definitely they will ask one question or one MCQ. But don't skip. Okay. So what is the AS10 name? AS10 is PPE. PPE stands for property, plant and equipment. Next one. Ind AS number 16. Ind AS 16 also deals with PPE. Sir, what is AS? What is Ind AS? Both are different. Ind AS number 16 is also PPE, property, plant and equipment. So directly focus on examination point of view. PPE includes all these things. Important one, this point. PPE is applicable to AS10 is applicable to all PPE. This is important. AS10 is not applicable to biological assets and wasting assets. Biological assets means living animals and plants. For this, standard is not applicable. Similarly, mines, oils, quarries, all natural assets, they are called as wasting assets. For them also, it is not applicable. But one more important point, AS10 is applicable to bearer plants. Bearer plants means what? Which gives crop for more than 1 year. Example, mango, coconut. For this standard is applicable. Okay. And I'll focus on examination point of view. Definition of PPE. PPE, property, plant and equipments are tangible items. If you want to call one article as a PPE, firstly that should be tangible item and held for use in either production or supply of goods or services, or rental to others, or administrative purposes. If the usage is only out of these three, then you have to call it as a PPE. Otherwise, you should not call it as a PPE. What are those three purposes? Production or supply of goods or services, rental to others, and administrative purposes. And usage should be more than 12 months. So whenever question comes from AS10, write this definition. Don't write this like a chart, write in a paragraph format. What should I write? PPE as per AS10. PPE means tangible items that should be held for use in production or supply of goods or services, or rental to others, or administrative purposes, and expected to be used for more than 12 months. Okay. And recognition criteria, you should recognize only when there is probable that future economic benefits will flow to the entity. Second one, cost can be measured reliably. From this you can expect a question, especially this area. So AS 10 says you have to recognize your PPE at 2 times. First is initial recognition, second one is subsequent recognition. Initial recognition means for the first time you are recording in your books. Subsequent means at every year end. Initial recognition we have to follow cost model. For subsequent you can follow cost model or revaluation model. Revaluation model means what? Listen. For example, ABC Limited is there. They purchased an asset for 30,000 rupees. How much? 30,000 rupees. Now they revalued to 40,000. That means what happened? Normally, if you follow cost model, your asset value should get decreased because of depreciation. But in this situation, what happened? Your asset value has been increased. That is called upward revaluation. What is that? Upward revaluation. So whenever your asset value has been increased, what shall I do? I have to debit asset. That means I have to debit asset. How much I have to increase? 10,000. You tell me, is it gain or loss to the business? Of course, gain only. No, your asset value has been increased. What to do? I have to credit it to revaluation reserve, or you can call it as a revaluation surplus. Okay, so AS 10 says the revaluation gain should be credited to revaluation surplus or revaluation reserve account. They will ask you some questions like, some accountant is there, so they revalued that asset, some gain is there, the gain should be adjusted against depreciation. That is the advice of the accountant. What do you say? What do you have to say? The accountant intention is wrong. As per AS 10, we have to credit that gain to the revaluation reserve or revaluation surplus. That's what you have to mention it. Have a look here. I drafted one example. Book value 30,000. For example, I revalued it to 40,000. That is called upward revaluation. What shall I do? I have to credit it to revaluation reserve or revaluation surplus. No sir, it is decreased to 25,000. That is called downward revaluation. That means it is decreased. What shall I do? I have to debit it to P&L account. Sir, why should I debit it to P&L account? That is a loss, sir. Losses should be debited. So the entry would be P&L account debit to asset account. So I am expecting question from this area only, my dear students. What is the answer? What is the area? Tell me. What is the concept? If your asset has been, sir, Telegram group link, Ashwant. Sir, any of my students who are already in Telegram group, please share that link here, or else please share that link to your friends who are watching this live. Any of our staff, either Chinababu sir or Dinakar sir, who are watching this live, so please share the link in our description of my Telegram group link, Papa number 10 link. They'll join. Otherwise I will share, no problem. So okay, listen. So if your asset has been increased, that is called upward revaluation. What is the entry? Asset account debit revaluation reserve account. If it is decreased, what is the entry? P&L account debit to asset account. I'm expecting question from this area. And very, very important, whenever changing significant component, sir, one asset is there, sir. I'm changing one component. Tell me, is it capital or revenue expenditure? AS 10 says, because of that new component, your output increases, you should capitalize it. Otherwise, charge to P&L account. Capitalize means what? Add to the asset. Apart from this, this table is very, 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 very important. Difference between Ind AS and AS. My dear students, I have written in simple format, so no need to write. I will share these notes during our break time. Okay? So if they can ask directly this question as 7 marks question, or else they may ask MCQs from this area. Don't skip difference between Ind AS 16 and AS 10. Very, very important. I'm warning you, my dear students. So this is all about AS 10. So let's come to the questions of AS 10. Machineries which appeared in the books of delimited 86 lakh. Our book value is 86 lakh, revalued at 90 lakh. So what happened? Our asset has been revalued upward by 4 lakhs. What is the treatment? Where should I credit this revaluation reserve? I have to credit it to revaluation reserve or revaluation surplus account. There is some concept, there is the accumulated depreciation was 28 lakh. The accountant suggested that the revaluation should be accounted for by adjusting the depreciation. Is that correct? No. What is the treatment? We have to credit it to revaluation reserve or revaluation surplus. The treatment of accountant is not correct. That's what we have to tell them. Question number 6. They are changing one significant component, value 85,000. The question is what to do. If that increases our capacity, so we have to capitalize it. Remaining all are revenue expenditure. That's it. Okay. So this is AS 10, very easy. Tell me what is the important areas in AS 10? In AS 10, if they are asking MCQ, they may ask MCQ from this area. Applicability, not applicability. AS 10 is not applicable to biological assets, wasting assets, and it is applicable to bearer plants. Bearer plants means which gives crop for more than 1 year, just like mango and coconut. And second important is definition of PPE. You should write the definition of PPE whenever they are asking question from AS 10. What is the definition? PPE or tangible items held for used in production or supply of goods or services or rental to others or administrative purposes, and expected to be used in more than 12 months. Next one, recognition criteria. We have to record only whether there is future economic benefits. Second one, cost can be measured reliably. Next one, recognition criteria. Initial recognition, subsequent recognition. Initial only cost, subsequent you can follow cost model or revaluation model. Revaluation, what revaluation model says? If it is upward, we have to credit it to revaluation reserve. If it is downward, we have to debit it to P&L. Asset account debit to revaluation reserve. If it is reverse, P&L account debit to asset account. And change in component. If there is change in component, only we have to record if there is increase in output. Otherwise, we have to go to P&L account. And very, very important, this differences. Difference between Ind AS and AS. Okay. Two standards are done out of 6 standards. What are those 2 standards? AS 1 and AS 10. Next one, I will share this material, you don't worry about it. AS 12. So this is every time they are asking question from AS 12, one the descriptive question. AS 12 is accounting for government grants. Similar to AS 10, for AS 10 we have Ind AS number 16, right? For AS 12 we have Ind AS number 20. Ind AS 20 is also accounting, not account. accounting for government grants. Remember, standard number AS 12 and AS 20. Important for MCQ. Government grants. Grants means what? Government is helping you, assisting you. For whom? Business entities, companies. Government grants may be in the nature of subsidy or cash incentive or duty drawback. Subsidy means one product cost is 100 rupees. They are giving you for 60 or 50 rupees only. That is called subsidy. Cash incentives means they are giving you cash directly. Duty drawbacks means they are reducing tax or they are completely removing tax, exempting tax, no need to pay tax, or reducing tax. So these three ways are there. They are called government grants. They may ask as an MCQ. Next one. As per AS 12, government means what? Government includes government and government agencies and governmental bodies. That government may be local government or national government or international government. Okay. Definition of government grant. Government grant means assistance by the government either in cash or kind for past or future complying conditions. So whenever you are receiving any grant from the government, that means government is not giving you for just like that. For example, in our AP or in our Telangana or in our Karnataka, so states are requesting all the companies, so please start business in our own state. Why they are requesting the companies to start their business? So all the state governments, they are interested to give the lands at a discounted price. For example, I think in Andhra there is a very big city. Where there is a big city called Visakhapatnam, Vizag. In Vizag, AP government is giving lands to the what is the company name? TCS. At I think they are giving lease for 25 years at 99 rupees per acre. Why they are giving at that much less cost? So government feels that if they start their business in our Visakhapatnam, definitely they can create more employment. Automatically the total surroundings will getting developed. Sometimes governments may give benefit and tell them to you have to do this kind of things. For example, when AP government is giving lands at that much discounted price to the TCS, means AP government will say that TCS, my dear TCS company, I am giving you some benefit. You also give me some favor in the form of creating employment at least 1,000 people for every year in from our AP. So that is called future conditions. Sometimes they may give for their past work, whatever they have done. So that is the definition of the government grant. Remember this definition also. What is the definition? Government grant means assistance by the government either in cash or kind for past or future complying conditions. Why government will give grants? For generating employments and development of state or country. So this is all introductory part of government grants. But from here onwards, very, very, very important, each and every attempt they are asking question from this area only, how to do accounting treatment from government grants. So actually students are following different methods, but for the simplicity of students, if the question comes from AS 12, I have divided all the questions into 5 cases. If you follow my next 10 minutes of discussion, definitely you can answer any question from AS 12. How many cases? 5 cases. Case 1. Government grants are in the nature of promoter contribution. Case 2, income in nature. Case 3, non-monetary in nature. Case 4, related to fixed assets. Case 5, revenue in nature. Definitely your examination question will comes from out of these 5 cases. What is case 1? In the nature of promoter contribution. That means name itself says government is behaving like a promoter. What is the meaning of promoter in your company law? Promoter means who is involved in the incorporation of the company. That means for doing something new, government is giving something to you. That means government is giving grant for doing something new. That is called promoter contribution. సింపుల్ నీకు అర్థమయ్యే భాషలో చెప్పాలంటే గవర్నమెంట్ అనేది ఇక్కడ ఇన్వెస్టర్లా పనిచేస్తుంది. ఒక కొత్త వర్క్ని స్టార్ట్ చేయడానికి కానీ ఆర్ ఫర్ డూయింగ్ సమ్ న్యూ ప్రాజెక్ట్ గవర్నమెంట్ ఈజ్ గివింగ్ గ్రాంట్ టు యూ. ఫర్ ఎగ్జాంపుల్ one company is there, they are giving some 100 lakhs grant to start one new factory in some rural area. For example, AP government is giving grant to BCCA for start up a new college in some tribal area. That is called promoter contribution. Because for setting up a new setup or new plant or new factory or new establishment, that is called promoter contribution. When you look at the question, if you feels that they are giving grant for doing something new, that is promoter contribution. Treatment is very easy. You have to credit it to capital reserve. That's it. Sir, how to find out whether that is case 1 or case 2? Very easy. If you feels that government is giving grant for doing something new, what we have to do? We have to treat it as a promoter contribution. We have to credit it to capital reserve. Next one, case 2. This is not a case 1. Nothing but government is giving grant for not doing something new. They are giving for the existing company only, for that is just for normal sake. For example, if AP government is giving grant to TCS branch already which is established in Vizag, or else for example Telangana government is giving grant to TCS, that is not a promoter contribution because already TCS is there in Hyderabad. Okay, so that is comes under case 2, that is income in nature. Then what to do, sir? For example, Telangana government is giving 10 crores grant to the TCS company, and they are telling the TCS company that, my dear TCS company, for next 5 years at least create employment for 1,000 people every year from our Telangana state. So whenever they are receiving the 10 crores, you have to look at whether that is case 1 or case 2. Is it case 1? No. Why that is not a case 1? So here government is not a promoter. So they are just giving like just kind of income in nature. I'm just receiving like an income. Then what to do? You have to treat it as a deferred income. That means you have to write 10 crores as your deferred income. They have given 5 years condition, no? Every year 2 crore, 2 crore, 2 crore, 2 crore. That is called credited to P&L on a systematic basis. Systematic basis means if you receive 10 crore for 5 years, every year 2 crores, 2 crores, 2 crores, 2 crores. You have to allocate throughout the 5 years. So the point is, so we are discussing AS 12 and Ind AS 20. What is the concept? Accounting for government grants. So the question will be like anything. There may be 5 cases. So you have to first identify what is the case. Is it case 1 or case 2 or case 3 or case 4 or case 5? If you identify the case, it is very easy to answer. What is the case 1? Promoter contribution. Sir, how can I say that is promoter contribution? If you look at the question, if you feels that they are giving for doing something new, that is promoter contribution. What is the treatment? Credited to capital reserve. That's it, done. Sir, no sir, they are not giving for doing something new. Then that will be treated as a cash to income in nature. What is the treatment? Treat it as a deferred income from their transfer to P&L on a systematic basis. What is the meaning of systematic basis? If they are given 5 years conditions, transfer up to 5 years. Case 3, grants are non-monetary in nature. In case 1 and case 2, government is giving cash to you directly. In case 3, government is not giving cash to you directly. They are giving some non-monetary thing. Non-monetary thing means they may give a land or they may give building, some things, etc. For example, like our Kerala government or Tamil Nadu government, they are giving some 100 acres of land to some Google or else some Infosys company. They may give at free of cost or they may give at a discounted price. Imagine my dear students, if some government is there, they are giving land at free of cost or they may give at a discounted price. For example, in that city, the land value is 1 crore, but they are giving it free at 0, or they may give it 20 lakhs only. If you are taking at free of cost, record nominal value. Nominal value means you may write some 1 rupee or 10 rupee or 100 rupees like that. Just like for the sake of entry, we are writing the amount, but in reality, we have not paid it. If you are taking a discount, that means the land value is 1 crore, but you are paying only 20 lakhs. Then write at acquisition cost. That means how much you paid, 20 lakh, right? 20 lakhs only, land account debit to cash, 20 lakhs, 20 lakhs. If you are taking at free of cost, what is the entry? Land account debit to cash. Nominal figure 10 or 100 or even 1 rupee also sometimes. If you are taking a discounted price, land to cash, how much we paid? 20 lakhs. That much we have to write here. Okay. So this is case 3. Out of 5 cases, 3 cases are done. What is case 1? Tell me. Grants are in the nature of promoter contribution. What is case 2? Grants are in income in nature. What is case 3? Grants are non-monetary in nature. What case 1 says? If they are in the nature of promoter contribution, we have to credit it to capital reserve. Case 2, if they are income in nature, what to do? Treat it as a defer income and transfer to P&L account on a systematic basis. What is case 3? Grants are non-monetary in nature. Non-monetary in nature means government is giving like land or building. There are 2 situations. They may give at free of cost or at discount. If you are getting at free of cost, record at nominal value. If you are getting a discount, record at acquisition cost. All the members who are watching this live, all the 250 members, remember, after completion of this standard, let's take a break. And during the break, everybody come and join in our Telegram group. I will share the link here. In that group, I will share all these materials. Okay. Case 4. If anybody unable to text me or unable to get the link, just message me through this Insta. There I will share the link of Telegram. Okay. Yeah. So now case 4, if grants are related to fixed assets. Now, what is the difference between case 3 and case 4? In case 3, the grants are non-monetary only. But in case 4, in case 3, government is giving asset to you directly. But in case 4, government is not giving asset to you. Government is giving cash to you. You have to purchase the asset. Best example is solar system. I think everybody knows. So central government will give some subsidy if you if you purchase solar system for your residential house. Okay, have a look. Condition by the government to purchase or construct or acquire fixed assets. For purchasing that asset or for constructing that asset or for acquiring that asset, if you are if government is giving grant, that is comes under case 4. Method 1, what to do, sir? For example, for installing that solar system in our residential house, the cost is some 20 lakhs. How much? 20 lakhs. But government is giving us 15 lakhs. That means, tell me how much I am paying from my pocket? 5 lakhs only. Method 1 says, write only 5 lakh rupees. That means solar system account debit to cash 5 lakh, 5 lakh. That means deduct it from your gross value. That is called, treat that grant as a capital receipt. So reduce from that asset cost. Write only solar to cash 5 lakh, 5 lakh. Second method says, write full amount 20 lakh, 20 lakh. But the grant is there now 15 lakhs. For that 15 lakhs, apply cash to. What is cash to? Treat it as a deferred income and recognize it on a systematic basis. So which method I follow? Your wish. Either you can follow method 1 or method 2. What is method 1 says? Assume it as a capital receipt. Deduct it from gross value. Write only how much you paid. Method 2 says, treat it as a deferred income. Write full amount. Solar system to cash. Write 20 lakh, 20 lakh. But the coming to the grant of 15 lakh, apply cash to treatment here. Treat it as a deferred income and recognize it on a systematic basis. Last case, case 5, grants are revenue in nature. Revenue in nature means up to case 4, they are giving grant for something set up in new or some asset or such kind of things. In case 5, government is giving. No, I will cover all areas. Listen, government is giving grant not only for capital, they are giving for some revenue expenditure. Sometimes they may give for paying salaries or for paying rent. For example, one hospital is there, their salaries for that month is 10 lakhs. Government is giving grant 6 lakh for salaries. So they are giving grant for revenue expenditure. No, that 6 lakhs. Okay. So again they have two methods. Method number 1, they can deduct from that expenses. How much they are paying from their pocket? 4 lakhs only. The entry, salary account debit to cash 4 lakh, 4 lakh. Or method 2, they can write full amount, salary to cash 10 lakh, 10 lakh. But the grant is there, no. That grant they have to credit it to P&L account. If you really understood the accounting with full of knowledge, you have to ask me one question. In case 4, we have to treat as a deferred income. In case 5, we are directly crediting to P&L account. Why? Why? Because this is a revenue receipt. We have to write only for 1 year. This is capital receipt. We have to write for future years also. So this all are the 5 cases. I will repeat the 5 cases. Case 1, promoter contribution. Case 2, income in nature. Case 3, non-monetary. Case 4, fixed assets. Case 5, revenue in nature. Very, very easy question, my dear students. When to refund government grants? If the business entity fails to comply with the conditions, we have to refund the grant to the government. So again same differences, Ind AS 20, AS 12, very very important. I have written in a simplified manner. I will share this file. Come to the questions. AS 12. Yeah. Have a look. D Limited received 80 lakh from the central government for setting up a factory in a backward area. They are giving amount for doing something new. What does it mean? That is a promoter contribution. What we have to do? We have to credit it to capital reserve. That is the answer. You have to write in your own words, no problem. This is refund. I covered in marathon. Here I don't want to cover it because I'm not expert in this question. Okay. If they have asked also, I have covered it, no problem. This question I'm expecting they'll give you different types of grants. So everybody is asking predictions. My prediction is question number 14. My prediction, question number 14. Explain the treatment of the following. A firm acquired fixed asset for 550 lakhs on which government grant received 40%. My dear students, tell me, is it case 1 or case 2 or case 3 or case 4 or case 5? Tell me. They are acquiring assets. Government is not giving any asset. So the government grant received 40%. Case 4, what they have to do? Two methods. Either they can reduce it or else they can treat it as a deferred income. Case 4. Question number 2. Capital subsidy received from the central government for setting up a plant. Case 1. What is the treatment? Credited to capital reserve. Question number 3. 125 lakh received from the local authority for providing medical facilities to the employees. Case 5. Revenue in nature. What is the treatment? Again two methods. Either you can reduce from the gross or else you can write the total figure credited to P&L directly. My expectation is question number 14. And this question as well. Differences. Ind AS 20 and AS 12. This is the refund question. I think you know it. This is also important. I've covered a number of times in our marathons and regular classes. Now the time is almost 8 p.m. We have covered hire purchase system. We can expect 7 marks question. And we have covered few accounting standards, AS 1, 10, 12. Few more standards are left. I will cover after the break. So every one of you who are in online, all the 250 members, take a break. Time is 7:55. So I will be back at sharp 8:20 p.m. After break, come back. Don't forget, we'll cover remaining accounting standards and insurance claims and MCQ areas and partnership and capital and revenue transactions BRS. if you everybody give me boosting, and if you are also involved, if you need more, definitely I will be with you up to 11 or 12, whatever you are up to 11 or 12 if you are interested. Still, if you need more, I will come back on tomorrow morning also. For me, I am always ready from team BCCA. Not only me, all my team is supporting me. So I will be back exactly at sharp 8:20 p.m. Come back as soon as possible. Okay. So meanwhile, I will share the notes in the Telegram group, and Telegram link is there. I will cover capital and revenue transactions, BRS, rectification of errors, and remaining standards, partnership accounting. Very, very important areas after the break. Don't skip. Okay. Have a light dinner and come back. Thank you. I'll wait for you.
Yeah, I think 3 minutes left. I'll wait for you. 8:20. I think I have shared all the notes in Telegram group. Go there and check it out. Okay, shall we start? So people will join. Meanwhile, what we are discussing? We are discussing accounting standards, right? So we have covered AS1, AS10 and AS12. It is time to start AS16. AS16 is borrowing cost. Again, we have one Ind AS number 23. AS16 and Ind AS 23. Again, these two are also discussing about same standard, that is borrowing cost. Okay. So again, let's focus only on examination point of view. Borrowing cost means, I think everybody know, if we are incurring any directly attributable cost, we have to add to the asset only. For example, installation of machinery. What is the journal entry? Machinery account debit to cash account. So similar to that, if you are taken any loan for construction of asset or purchase of asset, on that loan we have to pay interest, that is borrowing cost. For all such kind of borrowing cost, what we have to do? Whether we have to add to the asset or else we have to debit it to P&L account, which is correct. That's what given by this standard. This AS16 and Ind AS 23 are giving clarification with respect to whether we have to add that interest to asset or we have to treat it as a revenue expenditure in our P&L account. This standard says, standard is not telling directly you should add or you should ignore. This standard tells us if that asset is a qualifying asset, you should definitely capitalize it. Otherwise, one second. I'm just sharing the group link, one second. Okay. I'm giving all reply to all the students, no issue. Yeah, fine. So first of all, borrowing cost includes 4 kind of costs: interest, amortization of discounts or premium, finance charges and exchange differences. These 4 are called borrowing costs. What are those 4? Interest, amortization of discounts or premium, finance charges, exchange differences. They may ask an MCQ from this area. After that, so what this standard AS number 16 or Ind AS 23 says? What is the question first of all? Whether shall we add that borrowing cost to the asset or else we have to treat it as a revenue expenditure. The standard says if that cost is a qualifying asset, if that asset is a qualifying asset, you have to capitalize it. If that asset is a non-qualifying asset, you should charge it to P&L account. What is the meaning of qualifying asset? What is the meaning of non-qualifying? That is discussing, we'll discuss later. First of all, what asset says? Asset says, what the standard says? The standard says, if you want to add that borrowing cost to the asset, or if you want to capitalize that cost to the asset, only you have to do it if that asset is a qualifying asset. No sir,
that asset is a non-qualifying asset, that asset is a not a qualifying asset, then you should charge to P and L account. P and L account means profit and loss account. Now the $1,000,000 question to you guys is, what is the meaning of qualifying asset? What is the meaning of non-qualifying asset? Very easy, sir. Qualifying asset means asset which should take a substantial period of time to get ready to use or sell. That means to use that asset, or to sell that asset, it should need some period of time. That means what you can say, that is not ready to use or not ready to sell. To use it or to sell it, it should take some time. That asset is a qualifying asset, otherwise that is a non-qualifying asset. In simple sense, what I can say to remember in single word, if that asset is not ready, that asset is qualifying asset. If that asset is ready, that is called non-qualifying asset. What standard says, if that asset is a qualifying asset, you should capitalize it. If that asset is a non-qualifying asset, you should charge it to P and L account. That means AS 16 and in AS 23, these two standards main agenda is to find out whether that asset is a qualifying asset or that is a not a qualifying asset. If that asset is a qualifying asset, what we have to do? We have to capitalize that borrowing cost to the asset. Capitalize means what? Capitalize means we have to add that borrowing cost to the asset. If that asset is a non-qualifying asset, what we have to do? We should not add to the asset. We should directly write the debit side of the profit and loss account. Okay. Next one. Sir, okay sir, that asset is a qualifying asset only. Tell me from when to start capitalization. The standard says for commencing means starting capitalization, these three conditions should be satisfied. Condition number 1, expenditure for asset being incurred. That means definitely you should spend some amount for purchase of that asset or construction of that asset or acquiring that asset. That means you have spent some amount for purchasing that cement or sand or else some kind of bricks. Second one, borrowing cost are being incurred. That means definitely banker should ask interest to you. Third one, activities for asset in progress. That means that particular house construction should be in progress. Sir, no sir, I have taken bank loan but I am not yet started any kind of construction or foundation, then you should not start capitalization. For starting capitalization, you should satisfy all these three conditions. Next one, suspension of capitalization. Suspension means you have to pass it temporary. That means whenever your development is interrupted, whenever your active development is interrupted, that means you have stopped the construction, then you should not continue your capitalization, should pass. Sir, actually I have stopped my construction, but the reason is very genuine reason, the reason is necessary, then no need to pass, you can go, you can capitalize it. Just like for example, we are constructing one railway bridge or else some highway bridge. So that is very rainy season, very monsoon season. We cannot continue our work. In such a case, definitely you should not continue your work. For completion of that bridge, definitely you need that space. You should not continue in that period. So if that delay is necessary, then no need to pause, you can continue your capitalization. That's what I have written here. During the period in which active development is interrupted or disturbed. If the delay is necessary, no need to suspend. You can continue your capitalization. The last one, cessation of capitalization. That means you have to stop your capitalization. Whenever that asset is ready to use or sell, then no need to continue your capitalization. You have to stop there. Okay, these 3 points are important. When to start your capitalization, when to pass, when to stop. Start is called as commencement, suspension, pass is called suspension, stop is called cessation of capitalization. When to start capitalization, expenditure should be incurred, borrowing cost should be incurred, activity should be in progress. When to suspend your capitalization, when your active development is interrupted or disturbed. If that delay is necessary, no need to suspend. When to cease or stop, when that asset is ready to use or sell, nothing but if that asset become qualifying asset, no need to no need to continue. You have to stop your capitalization. Apart from this, as usual, difference between in AS 23 and AS 16, this is also a very important one. There I have written all the notes in simplified manner. Okay, so standard AS 16 is done. Let me revise the standard. In examination point of view, borrowing cost includes interest, amortization of discount or premium, finance charges, exchange differences. What AS 16 says, if that asset is a qualifying asset, we have to capitalize it. If that asset is a non-qualifying asset, we have to charge it to P&L account. Next one, when to commence the capitalization, if that expenditure being incurred, borrowing cost being incurred, activities are in progress. When to pass or suspend it, if that active development is interrupted or disrupted. If the delay is necessary, no need to suspend. When to cease our capitalization, when that asset is ready to use or sell. Standard number AS 16, India is number 23. Actually, I don't know why I am expecting this question. Just have a look at the table. Fine. So that is the difference between Ind AS as well as AS. So come to the question part. So question number 15. This question is again from same standard borrowing cost AS 16. So you can observe T&L Limited is a large construction company which is presently involved in the construction of railway bridge over river Ganga at Patna. project cost is 125 CR, 40% is financed by the some Asian Development Bank ADB, interest rate 3%. There has been delay in the completion of the project. So you could highlight the word delay in the completion of project. The manager of the project, I think he is saying that so we are not doing work because of the rainy season. We can't work over there. So he says that we no need to suspend. That's what standard also says. What standard says? You should not capitalize it. If that delay, you should not suspend it if the delay is a necessary delay. Yes, the delay is necessary. No need to suspend. That is correct only. So treatment done by so and so is correct. Question number 16. On 14th August 2022, Pushkar Limited obtained a loan from RAR Bank of 65 lakh. They have taken loan of 65 lakh, utilized as under purchase of equipment 19 lakh 50,000, construction of factory shed 26 lakh, advance for delivery of vehicle 6 lakh 50,000, working capital 13 lakhs. Total interest 11.7 lakhs. You have to tell them how much it should be capitalized, how much should be charged to P&L account. So here what is the problem? In this problem, we have taken single loan, but we have used it for multiple purposes. In that case, what is the treatment? What we have to do? So listen, first of all, try to understand what is the loan amount. Loan amount is totally 65 lakh. Out of 65 lakh, how much they used for purchase of equipment? 19 lakh 50,000. How much for factory shed? 26 lakh. How much for a vehicle? 6.5 lakh. How much for working capital? 13 lakhs. My dear students, out of these four types of expenditure, which is qualifying, which is not a non-qualifying asset. So first one, purchase of equipment, is it qualifying or not? 100% that is not a qualifying asset. Why? Because asset is ready to use it, no? So whenever that is ready to use, that is not a qualifying asset. When that is not a qualifying asset, if that asset is not ready to use. So in this case, that is directly we can say that is non-qualifying asset. At the same time, construction of factory shed, we are constructing it, no? That is in the progress of construction. That is also not ready to use or not ready to. That is also not ready to use or not ready to sell. That is a qualifying asset, because construction of factory shed is a qualifying asset. Why it is a qualifying asset? Because that shed is not ready to use or not ready to sell. What I told you, if that asset is ready to use or ready to sell, that asset is called a not a qualifying asset. When it is a non-qualifying asset, that is ready. When it is a qualifying asset, that should not be ready. In fact, what we can say, work in progress is called qualifying asset. Here what happened? We are constructing it, no? That means that is work in progress. That is definitely qualifying asset for sure. And point number 3, third expenditure, advance for vehicle, that is also non-qualifying asset. Why non-qualifying asset? That is also deliverable within 1 or 2 days. It will not take a substantial period of time for ready to use or sale. So that is also a non-qualifying asset. The last one, working capital. Working capital is also a non-qualifying asset. Why? Because that is a revenue expenditure. So out of 4 expenditure, 3 expenditures are revenue, 1 is capital expenditure. Now our target is out of 11.70 lakhs interest, we have to allocate this interest, some interest to the capital portion, some interest to the revenue portion. That means, have a look here. So 4 assets, equipment, shed, advance working cap. So total amounts we have spent 19,50,000, 26 lakhs, 6,50,000, 13 lakhs. Clear? And then have a look here. It is a non-qualifying asset, qualifying asset, non-qualifying asset, non-qualifying asset. And out of 11,70,000 rupees interest, how it is related to the equipment portion? Total borrowing loan 65 lakh. We have spent 19.5 lakh here. Then how to find out 11,70,000 into 19,50,000 by 65 lakh? Similarly for all the 4 assets. Okay. But second amount is the only amount which should be capitalized. Remaining 3 are revenue expenditure. So charge to P&L is 3,51,000, 1,17,000, 2,34,000. Charged to revenue capitalized is only 4,68,000. I'm expecting this question for your attempt, guys. And question number 17 is a little bit different question. I think I have covered here. No. Expenditure incurred till date, they have given 5 lakh rupees. Interest cost to be capitalized, they have given 26,000. Amount borrowed till this date 2 lakhs. And asset transferred to the construction department 1 lakh. Cash payment 75,000. Payment received progress 3,70,000. New borrowing 2 lakhs. So listen, what is the old borrowings? 2 lakhs. What is the new borrowing? 2 lakhs. Both the times interest rate is 13% only, no? I think you have calci. Tell me total loan amount 4 lakh into 13%. It is 52,000 rupees total interest. Okay. Remember the interest is 52,000. Then what is we spent on that asset? 5 lakh rupees spent on that asset. Already we have capitalized 26,000. Total 5 lakh plus 26,000. At the same time, we have assets transferred to the asset. Nothing but, for example, we purchased some what you call lift, such kind of things, plus 1 lakh. That means 6,26,000 plus cash payment. We spent some amount to the labor. How much labor payment? 75,000. And progress payment received during that construction of asset. We have given some space for parking. We received 3,70,000 less it. Then 3,31,000. So how to do it? For 5 lakh plus 26,000 and plus 1 lakh plus 75,000 minus 3,70,000. The amount is 3,31,000. Interest is 52,000. Amount to be capitalized. $52,000 into 3,31,000 by 5,26,000. That's it. Nothing more than that. This is repeated question. You can answer it. Next one. AS 22. Accounting for taxes on income. So normally you can observe one P&L account on your screen. So our net profit is 300 CR.
normally people will think that we have to pay tax on this amount, but that is not correct. We have to pay tax not as per this calculation, because this calculation is as per our accounting records. This profit is called accounting income, but we have to pay tax as per taxable income. Accounting income is different, taxable income is different. My dear students who are watching this live, this material will be given in our Telegram group. Go there and join. If you don't have, if you are unable to go to Telegram, and come to Insta and message me, and I'll share the link. Varma _151. Okay, this income is called accounting income, but we have to pay tax as per taxable income. Accounting income means net profit or loss as per profit and loss account. Taxable income means income or loss as per income tax laws. Both are different. Taxable income is different. Accounting income is different. Actually, we have to pay tax as per which income? Taxable income. So we have to pay current year tax as per taxable income into tax rate, not as per accounting income into tax rate. Then what I can say? Current tax equals to taxable income into income tax rate. Current tax means how much we have to pay in current year. So what we can understand by using it? Accounting income is not equals to taxable income. Accounting income means income as per Companies Act 2013. Taxable income is as per Income Tax Act. Okay, both are not equal. Clear? That means there are differences. Who is Sidhu? So there are differences between accounting income and taxable income. Accounting income is different, taxable income is different. There are huge differences between these two. There are two reasons for those differences. The reason may be permanent difference or timing difference. Permanent difference means Companies Act says you have to write on debit side. Income Tax Act says don't write. Or vice versa. Companies Act says don't write. Income Tax Act says write. Okay, now that is called permanent difference. We cannot reverse subsequently. Timing difference means we have to reverse it one or more subsequent periods. That means, of course, there are a non-acceptancy between Companies Act and Income Tax Act, but there is time gap only. For example, in SLM, Companies Act says follow SLM 20%. Income Tax Act says follow SLM 50%. Of course, in that particular year there may be change, but in overall there is no change. So tax expense equals to current tax plus deferred tax. What is the meaning of deferred tax, sir? Deferred tax means there is difference between accounting income and taxable income. Okay? Listen, if your accounting income is more than taxable income, the difference, remember these 4 lines, very, very important, my students. If your accounting income is more than taxable income, the difference is called taxable temporary difference. If your accounting income is less than taxable income, the difference is called deductible temporary difference. If there is a TTD, TTD means taxable temporary difference, there is a creation of DTL, deferred tax liability. If there is a deductible
temporary difference, you should create DTA. DTA means deferred tax asset. If your accounting income is more, you have to feel sad, you have to create deferred tax liability. If your accounting income is less, feel happy, you have to create asset called DTA, deferred tax asset. Okay. Very, very easy questions. Question number 20. No, 19. Huh? Let's do 20 first. Financial year, profit before tax, timing difference, permanent difference, tax rate remarks. So, what is the profit? 28 lakh. I told you two differences, no? Timing difference, permanent difference. They have given profit before tax means this is a accounting income. You have to find out taxable income. How you get taxable income? 28 lakh plus 3 lakh 15,000 plus 3 lakh 50,000. Do it and give me the answer. In your calci, 28 lakh plus 3 lakh 15,000 plus 3 lakh 50,000. How much? 34 lakh 60,000 into 40%. Just to do it. How much? 13 lakh 86,000. For second year you do it. 31 lakh 50,000 plus 2 lakh 10,000 plus 2 lakh 80,000 into 38%. Do it. For all these three, do it. 31 lakh 50,000 plus 2 lakh 10,000 plus 2 lakh 80,000 into 38%. 13 lakh 83,200. I am correct. Remaining two, you do it and give me in your comment section. I will wait for your answers. Everybody, all the 250 people. After this standard, we'll solve some easy chapters, capital and revenue transactions, BRS. Then we'll come back. Yeah, third asset, 35 lakh minus 70,000 plus 3 lakh 15,000 into 35%. 1310 750. Yes, correct. Prabhash, Bhavya, Karunakar. Yeah, everybody correct. Last one, do it. 24 lakh 50,000 plus 4 lakh 20,000 into 30%. 86,100. Bhavya correct. Yash correct. Srikar correct. Mohan Priya correct. Now come to question number 19. I will share this material also in our Telegram group. If you have not yet joined in that group, go and join. Question number 19. Classify the following as timing difference and permanent difference, and also state whether they result in DTA or DTL. First one, unabsorbed depreciation. Is it timing or permanent difference? So already I told you, permanent differences are very few, like penalties. Depreciation is a temporary difference. Whenever there is a temporary difference, then only there may be chance for DTA or DTL. When the difference is a permanent difference,
there is no chance for DTA or DTL. Permanent differences means Income Tax Act says no to that. They are like penalties and interest on scheduled bank if you have not paid. Because Companies Act follows accrual basis. No, you are writing it even though not paid. So Income Tax Act says if you have not paid, I will not allow you. They are permanent differences. Whenever that is a permanent difference, there is no kind of chance for DTA or DTL. DTA or DTL will arise only when there is a timing difference. So the first one, unabsorbed depreciation, is a timing difference. Now the point is it DTA or DTL? Very easy. Unabsorbed depreciation means listen. For example, in a company, gross profit is 100 rupees. This first one is Companies Act, second one is Income Tax Act. Companies Act has recorded 30 rupees depreciation. Income Tax Act says write only 20. They are not writing all the depreciation, they are giving less depreciation. That is called unabsorbed depreciation. So, then our net profit is here 70, here 80. As per our Companies Act, we have to pay less tax. That means, as per accounting, we have to pay more tax. That means you are paying more tax. Don't feel sad, that is your asset, DTA. Second one, penalties, interest on scheduled bank, both are permanent differences. No DTA, no DTL. Okay. Question number 21. Depreciation charged to income statement, nothing but P&L account, 8 lakh. As per Income Tax Act, 20 lakhs. That means you are writing more depreciation. That will become DTL. How much DTL? Extra how much depreciation? 12 lakh. Into, what is the percentage? 40%. Nothing but 4,80,000. Second one, unamortized preliminary expenditure. How much? 1,50,000. This is unamortized, means this is a DTA. How much DTA? Into 40%. Nothing but 60,000. Reduce, you will get 4,20,000. Very easy. If you want notes, I have given notes also here. Okay. 22 repeated question. Next one, AS 11. I think notes is not there for it. I will share it. AS 11 is the effects of changes in foreign exchange rates. Ind AS number 21. Both are discussing again with the same standard. What is the standard name? The effect of changes in foreign exchange rates. So first one, read the content. Ind AS 21 is also deals with the same. Same means foreign exchange rates. AS 11 is applicable to three things. First one, foreign currency transactions. Second one, foreign operations. Third one, forward exchange contracts in foreign currency. Vinay, if you are not getting Telegram group link and text me in Insta, this is ID, I will share it. Yeah, AS11 is applicable to foreign currency transactions, foreign operations, forward exchange contracts in foreign currency. They may ask MCQ from here. Okay, tell me it is applicable to whom? Foreign currency transactions, foreign operations, forward exchange contracts in foreign currency. Foreign currency transactions means what? Foreign currency transactions means transactions which are denominated in foreign currency or required to be settled in foreign currency. They are called foreign currency transactions. Examples: buying or selling goods or services priced in foreign currency. That means we are purchasing one laptop from US which is in dollars. That is a foreign currency transaction. Or buying or selling fixed assets denominated in foreign currency. Or liabilities taken or settled denominated in foreign currency. If you are purchasing goods or assets in foreign currency, they are called foreign currency transaction. If you are taking liability in foreign currency, or if you need to pay that liability in foreign currency, that is also called as a foreign currency transactions. They may ask this as an MCQ. Which of the following is considered as a foreign currency transactions? Have a look at it. Next, reporting currency. Reporting currency means currency of country where financial statements are reported. In which country you are reporting, that company, that country currency is called reporting currency. For example, for all our Indian companies, reporting currency is a which currency? Rupee. For US companies, for them reporting currency is a US dollar. Next one, foreign currency means currency other than reporting currency. Nothing but for Indian companies, any currency other than rupee is called foreign currency. For example, Japanese yen, euros, dollars, pounds, all these are called what? Foreign currencies. Tell me, what is reporting currency? Reporting currency means currency of country where you are reporting your financial statements. Foreign currency means other than reporting currency. Next one, exchange rates. Exchange rates means rates at which your foreign currency is converted into reporting currency or vice versa. For example, we need $1. For dollar we have to pay some 80 or 90 rupees. That dollar equals to 90 is called exchange rate. Okay. Next one, average rate means on an average what is the rate. Closing rate means exchange rate at the balance sheet date. Monetary items means money held and assets and liabilities to be received or paid in fixed amount like debtors or creditors. Non-monetary items means assets, liabilities other than monetary items. Examples, fixed assets, inventories, investments in equity shares, etc. Foreign operations means operational activities conducted in a country other than country of reporting currency. Examples, foreign branch, associate, joint venture, subsidiary, etc. Accounting treatment. There are 4 currency transactions. Number 1, initial recognition. Second one, balance sheet date calculation. Third one, contingent liability. Fourth one, treatment of exchange difference. First one,
Sir, how to recognize initially? What we have to do? We have to take exchange rate on that date of transaction. Sir, what about balance sheet date calculation? So there is a beautiful chart here. If that is a monetary item, convert into closing rate. If that is a non-monetary item, if they are following historical cost model, continue at actual cost only. If they are following fair value, convert exchange rate as on that date of calculation. So any difference we have to charge it to profit and loss. Here also same differences, Ind AS 21 and AS 11. I will share these notes. AS 11, some questions are there, very easy. Have a look. Subhash Limited purchased a machine costing 20 to 24 lakhs on 1/4/22. The same was fully financed by the foreign currency loan, US dollar, payable in 3 equal annual installments. Exchange rates were $1 equals to 70 rupees and 72.95 on opening date and closing date respectively. First installment was paid on 31st March 23. So we have to tell them what is the treatment. What is the total cost of a machine? 224 lakhs. They have taken in foreign currency, that means how much? 224 lakh by how much foreign currency rate as on date? 70 rupees. That means do it 224 lakh by 70 rupees means the loan amount is $3,20,000. Okay, what happened? The 70 rupees will become 72.95. Rate has been increased, no? Then is it profit or loss? Obviously loss only. How much loss? 3,20,000 into 2.95, 9,44,000. That should be transferred to P&L account. This is also same. Whenever change, we have to just transfer to P&L account, nothing more than that. Okay. So this is all about your accounting standards, my dear students. So remember, you are just one day before exams. So please think very, very wisely. I'll give you small paper tips now. So I think everybody is waiting for it. Listen. First one, whenever you have received your question paper, what to do? First thing, check hire purchase system question. If it is there, just write it. Second one, don't leave accounting standards. Here 7, here 23 marks. 7 plus 23, 30 marks. After that, insurance claims, definitely they will ask question. There are 3 parts in this chapter. First one, loss of stock. Second one, loss of profit. Third one, abnormal loss method. There are 3 parts they can ask. So after completion of this live, go to YouTube and in BCCA YouTube, in the same YouTube channel only. Yeah, everybody is asking again link. So go to YouTube channel and in marathon part 2, I think, check part 1 again, go to part 2 and if you open comment section, they have clearly someone given timestamps. Insurance claims part 1, part 2, part 3.
I have covered in detail how to solve loss of stock, how to solve loss of profit, how to solve abnormal loss method. Especially focus on abnormal loss method. I think my expectation for this attempt for your tomorrow's exam is either loss of stock or abnormal loss method, guarantee. No doubt in that. If you want, I will revise here only, but instead of repeating those same things, let me focus on uncovered areas. Okay? In detail, I have covered each and every part of insurance claims. 3 parts. Part 1, loss of stock. Part 2, loss of profit. Part 3, abnormal loss method. I think you know, in loss of profit, we have some 8 steps. Do you know those 8 steps? Otherwise, I'll open it. What is step number 1? Okay, no issue. So, in loss of profit, we have 8 steps. Remember those 8 steps? Step number 1, calculation of gross profit, if it is net profit and net loss. Step number 2, GP ratio. Step number 3, SAI, short sales. Short sales. And step number 4, GP lost on short sales. Step number 5, admissible additional expenses. Step number 6, gross claim. Step number 7, insurable value. Step number 8, net claim, P by I into Z. Okay. So this question I'm expecting. I'm not expecting loss of profit. This is also very easy. Have covered all these 3. Go there and check it out. And coming to the easy area, BRS, capital and revenue transactions and rectification of errors. From this they are asking 2 sevens. We'll cover right now. So let me take very small break. I'll go and have a water. Time is 9:18. I'll come at 9:21. 3 minutes. We'll start BRS. Okay, my dear students, so time is 9:22. So we are we having very less time. So let's don't waste our valuable time. So let me start very important chapter, and I hope for this attempt they will ask a question from BRS. Last time what happened? They have asked a question from rectification of errors, and they asked one question from difference between purchase day book and purchase account. Yeah, I hope you will get question from BRS. I'm expecting it. So listen, I'll tell you in very easy manner total BRS chapter. Before that, before starting BRS chapter, you tell me, do you have bank account? If you have bank account, whenever you have opened bank account, banker generally they'll give you one book. Right? That book is called passbook. One more name is there for this book, that is called bank statement. Nothing but passbook and bank statement both are same. Second one, clarification number 2. If you have bank account, whenever some of you or some of your parents or if your employer credited salary in your account, definitely you will get one message whenever amount is deposited in your account. That message is your account has been credited by so and so. That means in passbook their crediting means what happened? Your balance is increasing. In passbook, if you are withdrawing money, for example, you are using your debit card, or else if you are using phone pay or else any other kind of UPI payments, you will get one message immediately, your account has been debited. That means decreasing. That means in passbook point of view, crediting means in passbook crediting means your balance is increasing, debiting means your balance is decreasing. That means you have to feel happy, it is crediting. You have to feel sad when it is debiting. And clarification number 3, passbook is in the control of the banker. You cannot control the passbook. Of course, you are holding the Xerox copy of the passbook. That is not in the hands of you. That is in the hands of the banker. So, banker is the only person, he can control the passbook. You cannot control the passbook. Okay? Clarification number 4. You and me, we both started a business. For business, we need a bank account, no? Both of us opened bank account. What is the journal entry for it? Bank account debit to cash account. For example, we have opened account with 10 lakh rupees. Entry, bank account debit to cash account. How much? 10 lakhs, 10 lakhs. If you open ledger posting, nothing but if you open bank account, how much it is showing? To cash, 10 lakhs. Similarly, in your passbook also, banker also says your balance is 10 lakhs, sir. That means as per our books, as per bank account in the books of business organization, we are showing 10 lakhs in our bank account. Banker is also saying bank balance is 10 lakhs. Sir, why both are same, sir? Because both are discussing about same bank account with the same bank account number. Of course, they should indicate the same number. Then you may get one doubt. Sir, if both the books are discussing about same bank account, why there are two books? Why means one book is in the hands of the business organization, second book is in the hands of the banker. Second book is called passbook or bank statement. This bank account is called as cash book. Sometimes it is called as bank book, but majority they will called as a majority times cash book only. Students will get confused and they are in a wrong notion that cash book means cash balance, passbook means bank balance. In fact, while I was studying or while I was learning BRS, even I thought the same. I thought cash book means cash balance, bank book means passbook means bank balance. No. Cash book and passbook both are discussing about bank balance, bank balance, bank balance. Then why there is difference? Cash book is maintained by the business organization, passbook is maintained by the banker. So in this case, what happened? In our cash book, we are showing 10 lakhs, passbook balance is also 10 lakhs. Imagine next day again we deposited another 2 lakhs. Then we increased it 2 lakhs, our balance is 12 lakhs. They also increased it 2 lakhs, their balance is also 12 lakhs. Again both are same. Why both are same? Because both are discussing about same balance, same bank account. Next day, again I deposited 3 lakhs. In cash book 15 lakh, passbook 15 lakhs. Okay, listen, now what happened? Now, unfortunately, next day we withdraw 1 lakh. So we reduced, our balance is 14 lakhs. In passbook also, they withdrew 1 lakh, they reduced 1 lakh, our balance is 14 lakhs. Okay, that means both the books, cash book and passbook showing same balances. Next day at midnight 12 o'clock, bank has reduced some amount, like debited. Debited means what? Reduced for bank charges. Imagine, for example, 1 lakh. For sake of understanding, banker has reduced in their book 1 lakh. But we don't know that information. We are showing 14 lakhs in our cash book, but in bank book 13 lakhs. So there is difference between cash book and passbook. Whenever there is a difference between cash book and passbook, your target is to match those two books. What are those two books? Cash book and passbook. Here you are not doing anything. Here your agenda is to match these two books. Here you are not doing any accounting, or here you are not doing any calculation part. You tell me what to do to match these two. And remember one more thing, you have to give adjustment only for cash book, not to the passbook. Why not to the passbook? Because passbook is not in the control of the business entity. You can give adjustment only for which book? Cash book. Then what shall I do? I have to here reduce 1 lakh. Now both become 13 lakh, 13 lakh. Or now both are 13 lakh. Or one of my customer directly deposited some 1 lakh rupees in my bank that I don't know. This is 14 lakh, this is 13 lakh. What to do? Increase 1 lakh here. Again it will become 14 lakhs, 14 lakhs. Okay. Now listen, very, very important. I have deposited some check in my bank. Immediately I will increase my balance in cash book whenever I deposit it. But when banker will increase? Whenever that check is collected. Okay. So up to now that is 14 lakhs only in banker point of view. Then what to do to make it equal? Sir, can I add 1 lakh here? No, you should not do it. Why? Because that is not in your hand. Then what to do? Here reduce 1 lakh. Then both will become equal. Or else I issued check to someone. I immediately reduced that 2 lakh rupees. I am showing 12 lakh. When banker will reduce that amount, that means to whom I have given check, that person should go to the bank and he should present the check. Up to presentation of check, my bank balance is same. Here they are showing 14 lakhs only. Then what to do to make it equal? I have to add 2 lakh here. Sir, can I reduce here? No. That means BRS is completely, you are matching both cash book and passbook, nothing more than that. Okay. Let's solve one problem and that is more than easy. And before that, a small one more point is there. So actually, if the question comes from BRS, question maybe comes in 4 ways. Question number 1, they have given starting balance is cash book balance or positive balance or favorable balance or debit balance. Case 2, cash book negative balance or cash book unfavorable balance or cash book credit balance or cash book OD. 3 and 4, about passbook balance or passbook positive balance or passbook favorable balance or passbook credit balance. Case 4, passbook negative balance or unfavorable balance or debit balance. Okay. Case 1, whatever we did up to now, adjustments, no. Case 1 and 4, same treatment. Whatever we did, just like plus or minus. For case 2 and 3, reverse to the treatment. If you are adding here, do it minus. If you are minus it, do it add. Reverse calculation. Okay. And just 1 second, we'll solve one question. That is more than enough. Have a look. Passbook of a trader shows balance. So they have given passbook balance. That is case 3. Case 3 means we have to give reverse treatment, opposite treatment. What is the passbook balance they have given? 12,600. Some points are there. Check deposited in bank but not collected. Checks issued but not presented for payment. Bank charges. Bank paid insurance premium. Debtor paid so and so. First point, what happened? Checks deposited in bank but not collected. Whenever we deposited, what we have did, generally what we are doing, we will increase our balance in cash book. To match it, what we have to do? Reduce it. But this is case 3, opposite. What we have to do? Plus. If it is case 1 or 4, I have to minus it. Check issued but not presented. Whenever issued, what I did, I will reduce my payment. To match it, I have to add. Reverse, less. Bank charges. Then passbook is reduced. To match it, I have to reduce cash book. Reverse, add. Bank paid insurance premium 1500. That means passbook is decreased. To match it, I have to reduce cash book. Reverse, add. Debtor paid directly into bank. Passbook increased. To match it, cash book also increased. Reverse, reduce. That's it. Answer done. 12,600 plus 2,100 minus 1,800 plus 175 plus 1,500 minus 1,200, 13375. This is the answer. You can check it out. Okay. Similarly, we can answer BRS. And one more small chapter is there. You can expect question from here, either MCQ or else 7 marks question. So this chapter is capital and revenue transactions. So frequently they are asking. In recent exam they were not tested. So in this chapter we have totally 3 topics. One is capital and revenue expenditure. Second one is capital and revenue receipt. Third one is capital and revenue profits and losses. So capital and revenue expenditure, again we have 3 types of expenditure: capital expenditure, revenue expenditure, deferred revenue expenditure. Capital expenditure means expenditure for asset or directly attributable asset. For example, you are purchasing asset, that is a capital expenditure. Or if you are purchasing some land, building, machinery, furniture, all these are called capital expenditure. At the same time, for example, I have purchased one machinery. For that I am doing some installation. For that I have paid some 2,000 rupees. That installation cost is also capital expenditure. They are called directly attributable cost. Directly attributable cost means all costs whatever you are incurring to put that asset into usable condition, all they are comes under capital expenditure. Second one, revenue expenditure. Revenue expenditure means other than capital expenditure. For example, if you are paying any salaries, wages, rent, electricity bill, advertisement, all are comes under revenue expenditure. Third category, deferred revenue expenditure. This is a combination of both capital and revenue expenditure. Under that, there are three kind of expenditure: underwriting commission and redecoration expenses and free samples. These three are examples for deferred revenue expenditure. Next one, capital and revenue receipts. Receipts are again two types: capital receipts, revenue receipts. Revenue receipts means in the normal course of business, like sale of goods, commission received, discount received, interest received. Next one, capital receipts like sale of asset, loan taken other than revenue receipt. So profit or loss, again two types: capital profit or loss, revenue profit or loss. Revenue profit or loss means, sir, live I will start at 10:25. Revenue profit or loss means profit or loss in the normal course of business. Capital profit or loss means other than revenue profit or loss. Okay, very easy. You can easily identify the expenditure nature. And one question is guarantee either from bills of exchange or consignment or joint venture. In last attempt, I told them question is guarantee from consignment account. This time, my prediction is 60% chance for bills of exchange, 40% chance for consignment. Okay, have a look. I think you know bills of exchange very well, right? What are the entries in books of drawer or drawee? In consignment, I have explained in detail, I think, in my marathon. So have a look at. So I'm sorry, I can't take long hours. Of course, I can take, no problem for me, but you need to practice more. Okay? And I don't want to waste your valuable time. So definitely I'll help you out by giving some tips now. Next time we will plan one day before. Then it will be helpful to all the people. First of all, I think everybody perfect with hire purchase system, 7 marks, and accounting standards, 23 marks, insurance claims, 7 marks. Fourth one, everybody. Fourth one, bills of exchange, consignment, joint venture, 9 marks. And at any cost, don't skip partnership, sir. At least you can score 10 marks. Okay. Give me 1 minute. I will open MCQ and I'll share that file to you. Just 1 minute. Just 1 second, 1 second. So have a look. I'm sharing that PDF in Telegram group. That MCQ booklet will help you out a lot. So just now I have shared this file in your Telegram group. So we don't have much time. So just go through all these MCQs. Out of 15 MCQs, you can expect at least 6 to 7 MCQs from this area. Okay. So after that, still you feel my presence is needed, don't worry. Go to our YouTube channel, and in our videos recently I have uploaded part 1 and part 2 of BCCA marathons. I have completely covered all the areas except a little bit part of partnership accounting. Okay. So still, if you need any assistance, come to my Telegram group and text me. Definitely I'll give my favor. So at last, my predictions are for tomorrow's exam. First one, hire purchase system, interest calculation. Second one, BRS and capital and revenue transactions. Third one, insurance claims, loss of stock or abnormal loss. Fourth one, partnership accounting, either admission or retirement or death. Number 5, branch. Number 6, all accounting standards from our book, BCCA book, and differences in standards. Number 7, MCQ booklet which I shared in our Telegram group. These are more than enough. After completion of this, look at the remaining part. So I hope you enjoyed this session. I'm sorry, still I am not satisfied. Still okay. Definitely you all will qualify in your coming exam. And tomorrow we will have a wonderful session on corporate accounting and audit. That will be very easy because syllabus is less when compared to financial accounting. So everybody, thank you so much. Still I can continue, but if I take the classes, there is no time for you to prepare it. So come to a Telegram group and ask me whatever you want, I will share. If you have questions also, I will give the reply over there. And I am waiting for all of your buys or send off in your comment section. So please come to the comment section and give me reply. We'll close the session. You don't worry about it. Hope for the positive and use our marathon and write all these predictions. Okay. Thank you. Telegram group link I have given n number of times. Still, if you need, come to Insta and message me. I will share over it. Thank you. Bye. I'm waiting for your replies, my dear students. I will share AS11 PDF. I will share. Good night, my dear students. Thank you so much. Thank you. Thank you. Thanks a lot. Thank you so much.